We are getting more and more information, more weekly data that some of the calls we made on this channel, like the K-shaped recovery or the K-shaped economy, the potential for a rolling recession, and that next year is going to be a little bit different than the last couple of years, especially around rates and unemployment. Let's get into that and more. Lots of stuff to review with you. Why don't we start off with new home sales? Remember, existing home sales were reported yesterday. They came in and set a cycle low. I think, if I remember correctly, 3.84 million. On existing home sales, I am fairly certain and or confident that the next month will be even lower. If we fast forward to today's print on new home sales, what did we see? Last month, we sold 716,000. That's an annualized number. Expectation was for a small bump to 720,000. Actuals came in at 738,000. What does this all mean? Well, I think it is further evidence that home builders have the flexibility to, frankly, eat margin, aka buy down rates. If you follow the work of Logan from Housing Wire, if you go back and follow conversations that we've had on the Daily Financial News, it is rates below 6% create activity. Rates below 5% create lots of activity. Now, who has the ability, the forethought, the willingness, the balance sheet to buy down rates that far? Home builders. It is not something typically an existing home seller will do. So while I expect next month's existing home sales to be worse, I think it will be the reverse for new homes. Why? Because, again, they already know what works. As rates have gone now over 7%, new home developers will simply say, hey, mom and dad, you're not going to buy at 7%. You're going to buy at 4.9, 5.5, 6, whatever it takes to get in the house. And again, this is just part of what is going on in the world today. Let's talk about unemployment. If you remember our conversations from 3 short weeks ago, there was that one jump, that one spike to, I think it was 255 or maybe it was 257,000 weekly claims. It was a simple data point. We weren't sure if it was Hurricane Helene related or whatnot, but there was no follow through. Simply no follow through. Last week was 241,000. Expectations for this week were 242. Actual, get this, actual 227. That is with 2 hurricanes. That is with a Boeing strike. Again, weekly unemployment claims down. We are now back down to that 230 level where we just kind of coast. However, remember one of my unfortunate statements about next year? I'm trying to highlight for you that if we go back and revisit the early 80s, I want you to know that if you were going to get unemployed, unfortunately for a lot of us, that would mean longer stays on unemployment. Finding that next job will be tough. How do I know this, or what am I looking at? So, folks, for the last 6 months or so, I've been highlighting, hey, if you're a stay-at-home economist and you only have one thing to look at each week, look at weekly unemployment claims. Well, if I could ask you to add one more twist to that, same report, so you don't have to look at anything else. Look at what's called continuing claims. Continuing claims gets you a feel for duration. Because, again, if you see weekly claims just smooth, but you see continuing claims rise, you know that duration is getting longer. So again, what did we see this week? Again, estimates were 1.88 million on continuing claims, and we're up to 1.9. So again, it is already happening. What we are going to go through is a pretty similarly stagflation, rolling recession, I'm not sure which we'll call it yet, environment that's just, it's going to feel like we're running in mud. That's what I really think it's going to be like. It's not going to be this, crash or whatever. It's just going to be, it's not going to be fun. It's not going to be fun. That's what I see coming. So again, if you want to see what's going on, look at continuing claims. And again, the good news is it's the same report. You don't have to add anything. But if you want to get a weekly, drumbeat on the economy, that's the one I would look at. We did also get U.S. services PMI and U.S. manufacturing PMI. Again, you do not have to care about what these numbers are. Simply that, are they going up, down, contracting? Are they expanding or contracting? And if they are above 50 or not, right? That's what we should care about as stay-at-home economists. So we'll do services first. I would argue services are the most important because, again, we are a service-based economy. So what is happening? So good news is it's above 50, which means the service sector is expanding. Last month was 55.2. It was expected to fall to 55. In reality, came in slightly better than expected at 55.3. So not only better than expected, but growing over last month. U.S. manufacturing PMI. Unfortunately, this one is under 50, so contracting. Last was 47.3, was expected to get a little better to 47.5. In reality, it came in even better than expected, but still below 50 at 47.8. So again, better than expected, still contracting, but some positive movement from last month. Folks, I want to congratulate the accountability group inside our school. They just completed their 17th week of an accountability call. Again, folks, if you want to get started, or if you are already in real estate investing, you need to join the best real estate school on school. Just go to school.com and look up One Rental at a Time. We are putting on 3 different accountability groups each week. The Wednesday one just completed. And again, you can talk about anything you want there. This last accountability call talked about refinishing hardwood floors, checking or reviewing your contractor's license, and are they bonded and or insured, and moving from property management, paying a property manager, to self-management. Again, these are just some of the topics that were covered in the 3-hour accountability call. Shout out Frank, Old Guy REI, for doing all of the heavy lifting, running the accountability call, and just keep crushing it each week. Folks, you got to get around the right people. You got to get around the right experience. We have people talking about midterm rentals. We just had somebody post rates for their San Diego midterm rentals. We have people doing STRs or short-term rentals. We have people doing flips. You want to get in a community with other like-minded individuals talking about the right things, talking about real things, insurance and bids and quality of work and all of that. So again, get off your butt, sign up for the community. It's 67 cents a day. That is 2 quarters, a dime, a nickel, and 2 pennies. That is all it is. And then, of course, you get all the other things besides 300 amazing folks. You get all the boot camps and the creative financing. You get calendars of upcoming events and the like. So again, time to join. Not sure why you're not there. Join the community, introduce yourself, and if you don't like it, you can always leave, but I think you will like it once you introduce yourself. We did get some earnings to talk about today. We got IBM missed on revenue, exceeded on earnings. Revenue is, again, selling stuff. Earnings is making money. So again, they did not sell as much as expected, but earnings were good. Software, again, was up 10%. Consulting was flat. And again, like seemingly everyone, macro uncertainties. Again, if you don't know what consulting is in big tech, think about a bunch of bodies showing up to execute on a project. That's work that is sold. It is, again, flat. Tesla, shout out all you Tesla bulls. You guys are living good this morning. I guess a lot of the Tesla shorts are getting taken out. Tesla missed on revenue. They did beat on earnings and had a noticeable uptick in margin. Margin had been compressed to 16.8% last quarter, jumped 3 full percentage points to 19.8. Again, I do not play in with Tesla as too much of one of those stocks that has a lot of passion around it. I suspect the jump in Tesla is the announcement of the Model 2. But again, if you are a Tesla fan, feel free to leave comments below. Why do you think Tesla's up? Is it the Model 2? Is it the expanding margins? Is it the robots? No idea. Let me know what you think in the comments below. We also got some commentary from Whirlpool. Whirlpool, seller of, laundry machines and refrigerators and things of that nature. Weak quarterly sales. I wonder why. Consumer caution ahead of the U.S. election. Again, this is something that is common. It is actually so common, folks. It was mentioned in the Fed Beige Book. What the heck is the Fed Beige Book? It is simply a summary of what is going on in the 17 different Fed districts. Actually, in the Fed Beige Book, which just came out yesterday, there were 15 mentions, 15 mentions of election uncertainty. This was just an example of one of those 15. There is some hiring caution due to uncertainty of upcoming election. Again, folks, we've been talking about here on this channel for 8, 9, 10 weeks. We've talked about Q4 being a little slow across the board. We have talked about it being an amazing buying opportunity if you happen to be there. But yes, we are almost done. We are less than 2 weeks away from this election, and then we can get to seeing what we see after. Don't know if you saw this, but the Wall Street Journal highlighted that there's 27 million paid content creators. 27 million paid content creators. 44%. Let's just call that half for easy math. Half say that social media is their full-time job. So half of 27 million is 13.5 million Americans are full-time content creators on social media. One of the things that I have proposed to a lot of the economists that I speak with is I think our economy has fundamentally changed since the pandemic. And I keep telling them that their models of the old go to office, full-time, world are broken. This is why they keep having such nasty revisions, because their models are broken. In a world where 13.5 million folks, and likely growing, are full-time content creators, you don't need a lot of offices, right? You don't need, the model's just different. So again, it's pretty interesting. Well, let's talk about that K-shaped economy. This is something you and I spoke about for the first time 2 years ago. 2 years ago. It is becoming, I think, ever more evident to economists. I saw one on Bloomberg yesterday talking about the K-shaped economy, or the bifurcated consumer. Same thing. The top 30% doing fine. If you own assets, if you're in the market, you're employed, you're doing fine. You're spending, you're going on cruises, you're enjoying eating out. But the bottom 50%, many of them do not own assets. Many of them rent, and it's no bueno. It's no good. Again, the K-shaped economy, very likely could continue for years to come. Your takeaway from this, in my opinion, is you need to claw, scrape, you need to bust your butt, you need to create discretionary income, and you need to own assets. That's the lesson. The lesson is to, own where you are, and just like all the millionaires that we talk to on this channel, make a bunch of sacrifices and start to own assets. Again, that is pretty interesting. Fed President Mary Daly is out again. She's the San Francisco Fed President. Policy is still too tight. Rate cuts are coming. I should say more rate cuts are coming. Again, I think it is pretty clear that more rate cuts are coming, although, again, Fed controls the front end, not the long bond. So, again, it'll be interesting to see where rates go. The mortgage rates now are basically over 7%. We've been talking about that, really slowing down real estate, really putting in even lower. We might go as low as 3.6, 3.7 million annualized sales when we report next month. It is going to be ugly. A lot of folks have been talking about insurance, right? Lots of insurance talk, California, Florida, Texas, lots of other spots. Did you know in the state of California, 13% of California transactions were canceled due to not finding insurance? Yes, if you are in a fire-prone area, it is tough out there. And again, you can have these in, the Oakland Hills is an example of one where it is tough to get insurance. So think about that. More than 1 in 10 transactions in California is canceled because of insurance, lack of insurance. That is wild to think about. We did get a report from UPS, United Postal Service. They beat top line, beat bottom line. Yes, folks, UPS and their CEO said it's been a tough 18 months, but we have returned to both revenue and profit growth. That's actually something that I think about. I look at UPS. I look at a lot of these kind of shipping and also manufacturing companies, and I'm going, hey, is this the rolling recession? Again, remember, UPS for, 18 months, their CEO said, has been declining revenue and profit. They've just turned the corner. That's an example, or at least a potential example, of a rolling recession, right? We have some sectors in contraction while others are growing, and then the ones that are contracting come out, and maybe the others go in. Just an example of what I see going on out there. And then, folks, I don't know if you know this, but we had somebody else join School yesterday. Luke, thank you for joining School. Do me a favor, introduce yourself. Remember, Luke, we got lots and lots of goodies out there for you. We have a 6-hour masterclass on creative financing that's available at level 2. And then there's even a better thing at level 3, where you get a $1,000 10-week boot camp, take you through a buy box and growing and all of those things. Again, the levels are very easy to get to. You just need to introduce yourself, comment, likes to some other comments, and you will rise the ranks very quickly. And of course, folks, the Vegas event is getting closer and closer and closer. VIP is 50% sold out. Again, we're going to go for 12 hours on Saturday, 9 hours on Sunday. We're going to feed you 3 times. You're going to get to ask questions of all the millionaires. If you want to see the agenda, you just go to Eventbrite and you can look up One Rental at a Time. It's an environment you want to be at in real life, in person. Meet the 400 other amazing folks there. Get in the right rooms. Get around the right people. You will thoroughly enjoy it. So join School for that weekly content, and then the in-person event in February will be amazing. Folks, have an amazing day. We will do the next daily financial news on Sunday. Yes, I take Friday and Saturday off. Take care of yourself. Have an amazing day. Later.